Hi dear traders and investors, I'm glad to present to you a red hot market review prepared by analytics and forecasters FxCo portal. Here we go. Today is December 14 and the euro-dollar pair is on focus. Let's start with the simple trading tips and analysis for beginners from Powell. Euro-dollar did not show any interest in being active on Tuesday. However, the US inflation report changed everything. This report is now almost as important as the Federal Reserve meeting because the monetary policy depends entirely on the inflation rate. The latest report showed us that the Fed is on the right track, as inflation slowed for the fifth consecutive time and fell to 7.1% on year. Of course, the 2% target is still a long way off, but still the consumer price index is down steadily, which is very good for the US economy. And bad for the US dollar, which plummeted on Tuesday as lower inflation means that the Fed will quickly abandon monetary policy tightening. That is a major support factor for the US currency in 2022 will be offset more quickly. There is still no trend in the 30-minute chart, although in general, the upward movement, if we go to higher charts, continues. However, the pair has been trading in a horizontal channel for more than a week, so it's impossible to draw a trend line or channel now. Speaking of the trading signals, everything was just fine. The price bounced twice from 1.0535, forming two buy signals. In the first case, the pair went only 15 points, so the stop loss was triggered at break-even when the price returned to 1.0535. For the second time, it went up 15 points again, and beginners could put a stop loss at break-even before the release of the US inflation report. Therefore, there was no risk in this transaction. As you can see, the pair continued to rise and reached 1.0663, from which it rebounded. Therefore, at this moment, it was necessary to close the longs. The profit was about 90 points. The sell signal also had to be worked out, but it was not clear-cut, since the price immediately turned out to be near 1.0636, but could not settle below it. Therefore, it was possible to open short positions after setting below 1.0636. However, this signal turned out to be false and beginners received a small loss on it. But in total, the day ended with good profit. The uptrend has been cancelled on the 30-minute chart, but the upward movement as a whole continues, so that's the paradox. Remember that the Tuesday's upward movement was provoked entirely by the US inflation report. Euro could fall on Wednesday, as the results of the Fed meeting will be summed up in the evening. Although there's a high chance that they will be dovish, the dollar's growth cannot be ruled out. How to trade the euro-dollar pair with resistance and support levels. Jakub Nowak reports. The decline in the US consumer price index has led to a sharp rise in euro-dollar, which was quite expected. Today's report on industrial output in the Eurozone is likely to have little impact on the market, so there is a high chance that the pair will continue to rise. But the focus will be on the US statistics due out in the afternoon, as well as the Fed's decision on interest rates. The economic outlook of the central bank will also play a very important role, as Fed Chairman Jerome Powell is likely to discuss the plans for next year, making a couple of hints on how the Fed is going to proceed with a further slowdown in price growth. A dovish rhetoric could lead to another rise in euro and fall in dollar. For long positions, you can buy euro when the quote reach 1.0655 and take profit at the price of 1.0716. Growth could occur after the speech of Fed Chairman Jerome Powell, but remember that when buying, the MACD line should be above zero or is starting to rise from it. Euro can also be bought at 1.0618. However, the MACD line should be on the oversold area, as only by that will the market reverse to 1.0655 and 1.0716. For short positions, you could sell euro when the quotes reached 1.0618 and take profit at the price of 1.0556. Pressure may increase if the Fed says something that the markets do not expect. But take note that when selling, the MACD line should be below zero or is starting to move down from it. Euro can also be sold at 1.0655. However, the MACD line should be in the overbought area, as only by that will market reverse to 1.0618 and 1.0556. The next station is Focused Analysis by Laurie Bailey. The euro reached the target range of 1.0615 and 1.0642. Yesterday's important US inflation report contributed to this, and overall, the euro did not stay in a horizontal range. Yesterday's movement added more mystery to today's Federal Reserve meeting. On the technical side, will there be a double divergence from the current levels? In fact, all the conditions for that have been met. Second mystery, if the price reached the next target range of 1.0758 and 1.0787, will a divergence occur here? The dotted line on the daily chart. If not, the price will continue to rise to 1.10. And in other questions, also among the new ones, so what extent has the market taken into account the 50 basis points rate hike? Will there be a reversal of the euro precisely because of the circumstance? The revaluation of the single currency. Here we come to fundamental uncertainties. How pessimistic are investors about the outlook for the European economy? Yesterday, Italian industrial production for November showed a decline of 1% versus a forecast of minus 0.2%. The Eurozone's industrial production will come out today with a forecast of minus 1.5%, but it's likely to be worse. On Friday, the Eurozone's trade balance for October will be released with a forecast of minus 32.5 billion euros compared to minus 37.7 billion in September. But we also expect a worse figure for this index, as weak trade balance data has already been released this week for the peripheral Eurozone countries. And there's another reason why investors may not show a strong desire to buy, even if the rate hike is not 75 basis points but 50. It will still be a 4.5% increase. Can the stock market withstand this rate? The stock market withstood the November rate hike with a great difficulty, and on the day of the rate hike, the S&P 500 was down 2.5%. On the 4-hour chart, the price is waiting in the range of 1.0615, 1.0642. Even a divergence with the Marlin oscillator was formed. But it's weak and can hardly be an indicator before such an event like the third meeting. We can only wait for the development of events. That's all for today. Have a nice trading day. See you next time.